According to Uganda Debt Network, Uganda's debt is at a critical age, rising from $15.3 billion in 2020 to $19.46 billion in 2021.
Domestic debt is 7.16 USD billion. That is about 25 trillion. And then external debt is 12.30. It's about 42 trillion Ugandan shillings. And as you can see, it increased from 15.3 billion, that is approximately equal to 56 trillion Ugandan shillings in 2020.
Why is Uganda borrowing from the IMF? It is important to be conscious about external vulnerabilities, and this is why you should continue to ask this question. But we should be aware also of the implication of domestic borrowing. What does it mean for the banks? What does it mean for the financial sector exposure to the government? And what does it mean for private sector lending?
In a conference organized by Uganda Debt Network, together with African Forum and Network on Data and Development, experts have called for a joint venture approach to borrowing for African countries.
How do we take the debt question with one voice? Because we've had issues of where you find some people advocating for debt cancellation and others advocating for debt restructuring and so forth and so forth. How can we come together and say this is what we want to see as a continent?
The increased debt has been attributed to lack of feasibility study funds, poor revenue mobilization strategies, among others. Remarks from Makerere University pins government on the matter.
This billion, they could have done it into a farm and grow crops, produce exports, employ people, and cause the economy to grow. You are just giving them an option to say you can invest in government bonds. So it shouldn't be looked at that government is trying to borrow domestically among the people. You are also telling them it is better for you to invest in the financial sector as opposed to the real sector.
Government can reverse the downturn through committing to economic decisions that can lead to increased gross domestic product, argues Birahwa Mokitale, a debt expert.
When we get these loans, among the conditions, local content should be factored in. If 48% of 20 billion investment in oil and gas is ring-fenced for local content, then you can know. But NDP 1 and 2, where the biggest spenders, the trillions have gone into road sector and energy, I am not aware of a Ugandan company which has been built out of that expenditure.
Infrastructure investment comes with implications for current expenditure, because the road you build today have to be maintained forever.
The central bank has since March 2020, when the pandemic began to rise fears, put in place a raft of actions, among which include credit relief measures, liquidity support, and suspension of dividends, bonuses, and discretionary payments to preserve money to support real growth. Ramson Muhire, PM Edition.